Hi guys, my name is Yomi Martins, your financial services consultant from the city of Lagos in Nigeria. And the topic I'm going to be talking about today is on withholding tax, right? A lot of people would wonder, why will I be talking about withholding tax and all that stuff? Based on the challenges that we have in recession, small businesses, small and medium enterprises and everything, we need to be able to look at ways to remain profitable in terms of our bottom line. Our bottom line is important. What are the things that we can actually do to ensure that our bottom line remain very, very profitable? And one of the things I've discovered is using your withholding tax liabilities to offset your company income tax liabilities. Now, what is actually withholding tax? Withholding tax is actually your income tax paid in advance. That means for services that you have rendered or for some transactions that you have done, the federal government have already taken a chunk of that money, between 2.5% to 10% and 5% to 10%, depending on if you are an individual or you are a corporate, not respectively. Now, and it's also dependent on the transactions that you have performed. Now, how do you do that? How do you use your withholding tax to offset your company income tax in times like this? It's actually quite simple. Number one, there are so many transactions on your bank statement, right, that your bank would have charged you withholding tax for. Those transactions include interest on daily balances, your fixed deposits, and so many other transactions. Even some of the fees are actually have withholding tax liability. So all you need to do, if you do not want to call a consultant, which I will advise you to, is to get your accountant to spool all those figures on an Excel sheet, extract all those withholding tax liabilities, and write to your bank to get you a credit note that those payments have been made, which they are actually supposed to have made on the 21st of each month by standard, right? Now, apart from that, you have supplied so many other guys. You might have supplied Dangote, Lever Brothers, Nigerian Breweries and everything. You might have supplied them barley, food and all that stuff. They would have deducted withholding tax. You need to get a credit note from those people that you have supplied. Now, you have dividend warrants that have come to you and all that. Dividend warrants would have debited you 10% withholding tax and all that stuff. Do a collation of all those withholding tax that you are paid over time. And note very importantly, company income tax is like plus or minus about 30% in Nigeria of whatever you have earned as a company. That means for every 100 naira that you have earned, you are supposed to be paying 30 naira on that. Now imagine if you can use withholding tax liabilities that you are paid in advance, because that's the definition of withholding tax. You can use that, your consultant can actually use that to offset your tax liabilities for you. Will you not be better off? Think about it. These are trying times in which we must look at all aspects of our business and look at how to maximize our profitability. I leave you with that. I remain yours, Yomi Martins, your financial services consultant. If you love my video and you want to learn more or you want to leave a comment, please leave a comment down there. If you love the video and you want to see more, please subscribe right down there. Like, you are free to share. Remain safe till I see you again. Ciao, Bella.